Hello, my dear friends. Very good evening. Good evening, good evening, good evening. Wonderful. I welcome you all to the discussion on amendments in taxation subject, specifically applicable for May 2024 attempt. And we are going to talk about amendments in direct taxes and also amendment in both direct indirect taxes. That means we are going to talk about paper 3, part 3A as well as 3B. 3A talks about income tax, 3B talks about GST. Both will discuss, my dear friends. Let's just wait for a couple of minutes and let our friends join. And immediately after that, we'll start the discussion. Are we ready, everybody? Good. Wonderful. Thank you so very much. Let's start, my dear friends. Friends, first of all, we all know that for CA Intermediate, when the exam is in May 2024, all the amendments which are made up to 30th October 2023 are applicable for an examination. You're getting what I'm saying, my dear friends? And in fact, up to 30th November, which are made, that are applicable, not just 31st October, up to 30th November, the amendments made are applicable for an examination. And in this regard, Institute has released statutory update. I repeat once again, Institute has released what, my dear friend? Statutory update separately for income tax and separately for GST. The reason being very clear that there are so many interesting amendments which have come up, which are relevant for your examination. In this regard, let me also tell you that when you're writing exam in May 2024, when you're writing exam in May 2024, my dear friends, listen, when you're writing exam in May 2024, my dear friends, the interesting point to be noted is that Finance Act 2023 amendments are also applicable for examination. Which amendments? Finance Act 2023 amendments are also applicable for examination, and all the amendments and notification circulars which are issued up to 31st October 2023, they are also applicable for examination. So that point has to be clearly kept in mind, because that is an important point to be noted before we understand anything in the amendments. And now what I have done is, I have prepared a wonderful document, my dear friends. We will also share that document to the free resources. I have prepared a wonderful document consisting of both income tax as well as GST amendments, which we'll talk in detail so that we get a complete knowledge of what all the amendments are talking about. And we are fully clear with that. Clear, my dear friends? So without any second thought and without any delay, let us start the discussion, my dear friends, so that we get some great level of clarity of thought on all the interesting amendments. First, let me spend some good time on income tax, and after that, we'll spend some good time on GST as well, because there are some good interesting amendments in income tax also, some good interesting amendments in GST also. Both areas will focus. Now, there could be two sets of students. One type of student is that student who already wrote exam in November 23, but somehow luck did not favor and he couldn't clear. And now we are going to write exam in May 2024. That is one category of student. One more category of student is that student who is writing exam in May 2024 for the first time. Now, whatever category you belong to, amendments are same. But just I want to reiterate that students who are writing for the May 2024 for the first time, some amendments you would have already learned in the classroom itself. The reason being, during that time, the discussion of classes only, amendments have come, they are incorporated already a part of your discussion. But some amendments have come subsequently in the form of statutory update. That amendments also will talk here and become perfect with that. Make sense, guys? So are we ready? Let's all start, my dear friends, without delay. Fantastic. I love the participation. And any doubts you get in between, feel free to comment in the chat box. We'll be more than happy to reply and solve your query. Thank you. Let me share the screen, my dear friends. Yeah. I'm sure the screen is visible for you, my dear friends. Please confirm once that screen is visible. . Good. Fair enough. Thank you so much. So let me talk about the discussion, my dear friends. CA Intermediate Taxation, Paper 3, we are talking about income tax and GST, amendments for May 2024 examination. Now, first of all, one basic fundamental point, let me talk about it. I'll open my Excel sheet as well. Friends, first and foremost, one important point to be noted in income tax is that when you're writing exam in May 2024, I repeat once again, when you're writing exam in May 2024, the relevant assessment year for you is assessment year 24-25. Which assessment year, my dear friends? Relevant assessment year is 24-25. Let me repeat once again, my dear friends. Come on. For May 24 exams, my dear friends, the relevant assessment year is AY 24-25. And previous year is, my dear friends, 23-24. This is one basic thing what you're supposed to know, that relevant assessment year is 24-25 and relevant previous year is 23-24. That is for first fundamental basic. Now, one very important point, let me tell you, my dear friends, that section 115 BAC is known as default tax regime. What do you call it, my dear friends? Default tax regime. I repeat once again, section 115 BAC is known as default tax regime, which is applicable in case of individual or HUF or AOP or BOI or AJP. HUF stands for Undivided Family, AOP stands for Association of Persons, BOI stands for Body of Individual, AJP stands for Artificial Judicial Person. So this section 115 BAC is applicable to individual, HUF, AOP, BOI, AJP. And this section 115 BAC is known as default tax regime. What do you call it, my dear friends? Default tax regime, which clearly says up to 3 lakhs, the tax is nil. And 3 lakh to 6 lakhs, they told tax at the rate of 5%. Then 6 lakhs to 9 lakh at the rate of 10%. 9 lakh to 12 lakh at the rate of 15%. 12 lakh to 15 lakh at the rate of 20%. Getting my point, everybody? And above 15 lakhs, the tax rate is, my dear friends, straight away 30%. This is the tax rates given under default tax regime in case of individual, HUF, AOP, BOI, AJP. Up to 3 lakhs, the tax is nil. 3 lakh to 6 lakh, 5%. 6 to 9 lakh, 10%. 9 to 12, 15%. 12 to 15, 20%. Above 15 lakh, it is 30%. And here, let me tell you one interesting point. That is, we cannot claim lot of exemptions or deductions are not allowed. A lot of exemptions or deductions are not allowed under default tax regime. So if a person is paying tax under default tax regime, my dear friends, he will not be allowed to take a lot of exemptions and deductions. What is that he can't take? That we'll talk in detail. Clear, friends? Next. Concept of AMT is not applicable. What is AMT? Alternate minimum tax, where we'll calculate something called adjusted total income. On adjusted total income, we'll calculate AMT at the rate of 18.5%. That concept is also not applicable in case a person is paying tax under default tax regime. Next. If assessee does not have PGBP income, then year on year, he can opt out of default. That means if he does not have PGBP income, he can decide that 1 year I will pay tax under default, 1 year I will pay tax under optional. Choice is all yours. And he has to opt while filing a return of income. And what they told in the law is that if assessee has PGBP income, then what they told in the law is that he can opt out of default, then again opt out of, then again then again opt, then again what, my dear friends? Opt out of optional. That means what has happened is first he was in default. He realized that default tax is coming more, better I'll go for optional. Then he has gone for what? Optional. He has come out of default and he has gone for optional. But after 1 year, he realized that, oh my God, default was only better, optional tax is even more. Then he can opt out of optional. And once he opts out of optional, then he can never opt out of default unless he does not have PGBP income. So what is the whole point here you have to understand is that if a person is having PGBP income, I repeat once again, if a person is having what income? PGBP income. What law told is you are first under default. When you're paying tax under default, you thought that default tax is coming more. If the tax will be less under optional, if I take exemptions and deduction. Then you went out of default, went for optional. Paying tax under optional. After that, you yourself felt this optional tax is more. Better I'll leave the optional and again choose default. Law is telling choose. No problem. But second time when you have chosen default, after that, we will not allow you to again go out of it. Getting my point, everybody? All of us, my dear friends? So what is the whole logic here? If a person does not have PGBP income, year on year he can change. That means 1 year default, 1 year optional, 1 year default, 1 year optional. That is okay. But if a person is having PGBP income, then if he is opting out of default and coming into optional, after coming into optional, he is telling, again, I'll go back to default. Law is telling go back. But after that, we will never allow you to opt out of default till lifetime, unless you do not have PGBP income. And friends, what are the tax rates in default, my dear friends? Up to 3 lakhs, nil, 3 lakh to 6 lakh, 5%, 6 to 9, 10%, 9 to 12, 15%, 12 to 15, 20%, above 15 lakhs, the tax rate is 30%. That's the story of default tax regime given under section 115 BAC. Very, very interesting section. And henceforth, this section 115 BAC is known as default tax regime. What do we call that, my dear friends? Default tax regime, section 115 BAC. And if a person wants to opt out of default tax regime, he can opt out of default tax regime. And default tax regime concept is given by section 115 BAC. You might get one doubt, sir, what will happen if a person opts out of default? How much tax he has to pay? That already you guys know. We have got 3 categories: normal, senior, super senior. Normal 0 to 59, senior 60 to 79, super senior 80 and above. Normal, what are the slab rates? Up to 2.5 lakhs, nil. 2.5 to 5 lakh, 5%. 5 to 10, 20%. About 10, 30%. Senior, up to 3 lakhs, nil. 3 to 5, 5%. 5 to 10, 20%. About 10, 30%. Super senior, up to 5 lakhs, nil. 5 to 10, 20%. About 10, 30%. The same thing is what we are talking about. Are we getting clarity, everybody? Guys, come on, please speak out. Excellent. Come on, let me get back. Come on, see that, my dear friends. If an individual HUF, AOP, BOI, or AJP exercise the option of shifting out of default tax regime. Sir, in the question, they will specify very clearly whether he is paying tax under a default tax regime or he has opted out of default tax regime. In the question, if they specify that if he shifted out of default tax regime, that means he is paying tax under an optional tax regime, which is nothing but normal provisions. Clear, friends? What are the normal provisions? 2.5 lakhs nil, 2.5 to 5 lakh 5%, 5 to 10, 20%, about 10, 30%. And this is not something new for us. And senior citizen up to 3 lakh nil, 3 to 5, 5%, 5 to 10, 20%, about 10, 30%. Super senior citizen who is age of 80 and above, up to 5 lakhs nil, 5 to 10, 20%, about 10 it is 30%. Moving ahead, my dear friends, default tax regime, section 115 BAC. applicable for individual HUF, AOP, BOI, AJP. And here the tax rates are what? Up to 3 lakh, nil, 3 lakh to 6 lakh, 5%, 6 to 9, 10%, 9 to 12, 15%, 12 to 15, 20%, above 15 lakhs it is 30%. Please do keep in mind the tax rates under default tax regime, the tax rates under optional tax regime. Sometimes in question they also might ask compute tax under default also, compute tax under optional also. And at that time you have to be very, very clear and accordingly calculate the tax. Make sense? Brilliant. Let me talk some special points in default. Option to opt out of the scheme. Persons having income under business or profession on or before the due date specified under 139(1) for furnishing return of income. We know the return of income due date, right? 31st October in 3 cases. Number 1, companies. Number 2, any other person who is subject to tax audit. Number 3, partner of the firm if the firm is subject to tax audit. These 3 cases, 31st October. Any other case, it is 31st July. And the option once exercised should apply for subsequent assessment year. However, he can only once withdraw such option and pay tax under default tax regime. And thereafter, he shall never be able to exercise the option of opting out, except when he ceases to have business income. I already wrote that in simple language and explained that to you, my dear friends. Next line. Individual or HUF having income other than income referred above. That means not having PGBP income, along with return of income to be furnished under 139(1) for a previous year relevant to assessment year. That is, he may choose to pay tax under default in 1 year and exercise the option to shift out in another year. Year on year, he can change. That facility is there. If you do not have what income? PGBP income. Clear, friends? Next slide. Total income is computed without the following exemption or deduction. You cannot take the following exemption or deduction if you are paying tax under default tax regime. Let's once quickly recall and revise those points. Number 1, leave travel concession contained in section 10.5. I'm sure you know what is section 10.5, my dear friends. We discussed very clearly about 10.5 where in a block of 4 years, 2 journeys are exempt. Remember that? Journey is performed by air, economy class ticket, performed by rail, first class AC rail fare, any other mode of transport, deluxe class fare. Exactly. Next. Interest under section 24 in respect of self-occupied property. You have to note this point that self-occupied property. Property can be let out, property can be self-occupied. If the property is self-occupied, then you cannot take interest deduction if you are paying tax under default tax regime. Very, very important point. Extremely wonderful. 24B deduction will not come in case of self-occupied property if the person is paying tax under default tax regime. Next, HRA as contained in section 1030, very popular section. Least of the following 3 is exempt. Number 1, what is number 1? Come on. Actual HRA received. Number 2, rent paid minus 10% of salary. Number 3, 50% of salary if house is in Delhi, Mumbai, Chennai, Kolkata. Any other place, 40% of salary. That HRA exemption will not come if you are paying tax under default. Obviously, no, see, when the rates of tax are less, then they'll obviously tell that we will not give this benefits, we will not give, then pay tax under default. If you want this, then go out of default, pay tax under optional. Choice is yours. So that is the reason why a lot of times what happens is students come to me directly and tell, sir, you please tell default is better or optional is better. And my answer always to them is, it depends. If you have got more of exemptions and deduction, then obviously shifting out of default is better. But if you do not have much of exemptions and deduction, what is better is, of course, default. Next. Additional depreciation as contained in 32(1)(2)(a). We can take depreciation, but we can't take additional depreciation. Some of the allowances contained in section 1014, like children education allowance, children hostel allowance, transport allowance, all those will not come in case of default tax regime. Various deduction for donation for scientific research. Then, allowances to MPs, MLAs contained in section 1017. Daily allowance or constituency allowance to MPs, MLAs. Deduction under section 35AD. That is your specified business, my dear friends. Cold chain facility, warehousing of agricultural produce, hospital 100 beds per patient, hotel of 2-star and above category, all those are called specified business. What happens in specified business? Capital expenditure can be claimed as deduction at the rate of 100% except land, goodwill, financial instrument. That benefit will not come if you are paying tax under default. Getting clarity, everybody? Next. Allowance for income of minor child as contained in section 1032, which is nothing but actual income or 1,500 per child, whichever is lower. That also we can't take. Next. Any deduction under chapter 6A except ATCCD2, that is central government employers contribution to pension scheme of central government, ATCCH2 Agnipath scheme, and ATJJAA in case of new employment. So these three sections, CCD2, CCH2 and ATJJAA, only these three can be taken if a person is paying tax under default. So if a person is paying tax under default tax regime, he cannot take any chapter 6A deduction except ATCCD2, ATCCH2 and ATJJAA. Next. Exemption for SCZ unit contained in section 10AA. That also we can't take under default tax regime. Section 16.2 and 16.3. 16.2 is entertainment allowance, 16.3 is professional tax. But you can still take 16.1. That means nothing but standard deduction. Section 16.1A, standard deduction of 50,000. Actual salary of 50,000, whichever is lower. Standard deduction in case of salary, that can be taken whether you are paying tax under a default tax regime or optional tax regime. But if you are paying tax under a default tax regime, you cannot take section 16.2 and section 16.3. 16.2 and 16.3 is not allowed in case of default tax regime. Next. While computing total income, any exemption or deduction for allowances or perquisites by whatever name called. Any exemption or deduction for allowances or perquisites by whatever name called provided under any other law for time being in force would not be allowed. And while computing total income, set off of any loss, carry forward or depreciation from any earlier previous year, if that loss or depreciation is attributable to deductions referred above, that is 35AD or 10AA, something related to that. Next, set off of any loss, this point is important. Set off of any loss under the house property with any other head would not be allowed. Just now I told you that if it is self-occupied property, you can't take 24B deduction. What did I just told you, my dear friends? If it is self-occupied property, you cannot take 24B deduction. Correct, my dear friends? One more point what I am telling, you cannot set off house property loss with other income if you are paying tax under a default tax regime. Very important line. I repeat once again, very carefully listen. Number one, if you are paying tax under a default tax regime, you cannot take 24B deduction if the property is self-occupied. What is one more point here? If you are paying tax under a default tax regime, you cannot set off house property loss with any other head of income. You cannot set off what loss? House property loss with any other head of income. That cannot be done if you are paying tax under a default tax regime. What a brilliant point, man. Very, very important points. Please do keep in mind, because there is a high probability that a question will come in exam from section 115 BAC. Next point. Rebate. So generally, what is the concept of rebate? In case of optional tax regime, that is normally, what is the story? Rebate is applicable only to those. Rebate is applicable only to those whose total income does not exceed 5 lakhs. And the rebate is tax payable or 12,500, whichever is lower. But one special point I want to tell you is that if a person is paying tax under a default tax regime, rebate is applicable to resident individual whose total income does not exceed 7 lakh rupees. And the rebate is tax payable or 25,000, whichever is lower. Very, very important point. Let me explain that to you a little bit more in detail, my dear friends. Come on, listen carefully here. Rebate under section 87A in case of default tax regime. Clear, my dear friends? First of all, this is allowed only to a resident individual. This is allowed only to whom, my dear friends? Only to a resident individual whose total income does not exceed 7 lakhs. Does not exceed how much, my dear friends? 7 lakhs. And the rebate is tax payable or 25,000, whichever is lower. Now, let me take one interesting example. Let us say one person, Mr. A, he is paying tax under section 115 BAC. And let us say, for example, total income is 6,50,000. How do we calculate the tax, my dear friends? Up to 3 lakhs, what is the tax? 0. Correct? No. And 3 lakh to 6 lakh, at what rate, my dear friends? 5%, which is nothing but 15,000. And 6 lakh to 6.5 lakh at the rate of 10%, which is 50,000, 10%, which comes to 5,000. And total is 15,000, 15,000 plus 2, 5,000, which is total is 20,000. But we can take something called rebate under section 87A. Because in case of default tax regime, rebate is allowed to a resident individual whose total income does not exceed 7 lakh rupees. And the rebate is tax payable or 25,000, whichever is lower. That means what rebate I'll get is 20,000. And the tax payable will become 0, my dear friends. You have to understand the point very clearly here. You cannot afford to write rebate is 25,000. We will get refund of 5,000. You will not get 5,000 refund. In case of what you call rebate, you cannot take more than your tax. Getting my point, everybody? Because rebate is tax payable or 25,000, whichever is lower. So if a person is paying tax under optional tax regime, it is allowed to resident individual whose total income does not exceed 5 lakh rupees. And the rebate is tax payable or 12,500, whichever is lower. However, if a person is paying tax under a default tax regime, it is applicable to those category of resident individual whose total income does not exceed 7 lakh rupees. And the rebate is tax payable or 25,000, whichever is lower. But let me talk about one special point here. Special case like this. One person, Mr. X, he is paying tax under default and he is resident. Let us say, for example, total income is 7,20,000. How much is total income? 7,20,000. How do we calculate tax? Up to 3 lakh it is 0. And 3 lakh to 6 lakh at the rate of 5%, which comes to how much, my dear friends? 15,000. Next, 6 lakhs to 7.2 lakh at the rate of 10%, which comes to 12,000. Which comes to what, my dear friends? 12,000. And the total will come to how much, sir? 27,000. Sir, now you tell me one straight point I'll ask you. Sir, if income would have been exactly 7 lakh, I repeat once again. If income would have been exactly 7 lakh, if income would have been exactly 7 lakh, what would have been tax payable? 0. Because the rebate will come to 25,000 and the tax will become 0. Because up to 7 lakh, exact 7 lakh tax payable is 25,000, rebate is 25,000, tax is 0. But here it is 7,20,000. Now because income has increased by 20,000, because income has increased by 20,000, the tax is coming to 27,000. So in that case also, my dear friends, law is telling we will give rebate under section 87A, which is nothing but 27,000 minus 20,000. Otherwise, what they're trying to tell is that because you got 20,000 income, you are paying 27,000 tax. We don't want you to pay more than what you actually got. What you actually got is 20,000, but you don't, please don't pay 27. We'll give you rebate of 7,000. We'll give rebate of 7,000. And the balance will become 20,000. To that, I will add HEC at the rate of 4%. I'm sure we know what is HEC. Health and Education Services. And the total tax will work out to 20,800. I believe you're getting clarity, my dear friends. Everyone, please reply, guys. Very, very interesting concept of rebate under section 87A. Makes sense, my dear friends? Everybody, please reply. Come on. Are we getting complete clarity on this point? See, the whole objective of today's session is all to become perfect in amendments. For that only we are conducting this lecture. So feel free to ask in case if you have any doubts. Are we clear? Can I proceed? Online one student is telling marginal relief. Yes, it is something like marginal relief. It is something like marginal relief only. But we'll not use the word marginal relief here because marginal relief concept is only and only in case of surcharge. Good. Sounds good. I think I can proceed now. Thank you. Come on, next point. Surcharge table. Surcharge already you know all the rates. But the only thing which I want to highlight is that surcharge here 37% is there in case of optional tax regime, but in default tax regime, the maximum is 25% only. So it is more than 2 crore, does not exceed 5 crore, it is 25%. More than 5 crores, still it is 25%. That's an interesting point, you have to note it. And any which ways, we know that in case of dividend and in case of capital gain chargeable to tax under section 112, 111A and 112A, in that case, the maximum rate of surcharge is 15% only. Where total income includes dividend, any income charged under section 112, 111A and 112A. The surcharge on the amount of income tax computed on that part of income shall not exceed 15%. Always do keep in mind that surcharge is on tax. Surcharge is on tax. HEC is on tax plus surcharge. Clear, my dear friends? Exactly. Make sense? So that is the story of the changes in tax rates, my dear friends. And I'm sure you understood the concept of rebate also under 87 in case of default tax regime, applicable only to those whose total income does not exceed 7 lakh rupees. And rebate is tax payable or 25,000, whichever is lower. And even if total income is more than 7 lakh rupees, still rebate is possible if the tax is more than income beyond 7 lakh. In my example, if you observe carefully, the income is 7,20,000, but the tax is 2720. How much I've got? 7,20,000, but the tax payable is 27,000. Just because I have earned 20,000 extra, you cannot tell my tax is 27,000. That is too much. That is why law gave benefits. Clear, friends? So that's the end of story for tax rates. Can I proceed? Please do confirm. Thank you very much. Next point. Section 50AA. I'm moving ahead to capital gain section, my dear friends. Capital gain on transfer of unit of specified mutual fund or market linked debentures. First of all, this section 50AA, my dear friends, section 50B talks about slump sale. Section 50 talks about capital gain on depreciable asset. 58 talks about power sector unit. Now they brought one new interesting section 50AA by Finance Act 2023 to specify that if there is a capital gain on transfer of unit of specified mutual fund or a market linked debenture, then it is deemed to be short term. Deemed to be what, my dear friends? Short term. See that line, come on. Transfer of unit of specified mutual fund acquired on or after 1/4/2023. Unit is acquired on or after 1/4/2023. Or units of market linked debenture. Definition we'll see. Don't worry. Capital gain would be deemed to be short-term capital gain and will be chargeable to tax at normal rate. Don't tell us section 111A will come, right? 111A is only in case of short-term capital gain on sale of equity shares or units of equity-oriented mutual fund or units of business trust to recognized stock exchange on which STT is paid. Then only that 111A will come into picture. If it is long-term, 112A. Excellent. Come on. Market linked debenture means what? A security which has underlying principal component in the form of debt security and where the returns are linked to market returns. I repeat that line once again. What is that point, my dear friends? Market linked debenture. Come on, I repeat once again. What is that line? Market linked Market linked debenture means a security which has an underlying principal component in the form of debt security, and the returns are linked to market returns. That's why we say they are subject to market risk on other underlying securities or indices, and includes any security classified or regulated as market linked debenture by SEBI. And specified mutual fund means a mutual fund where not more than 35% of total proceeds are invested in equity shares of domestic company. Not more than 35% is in equity share. Technically, it is something like debt-oriented mutual fund. Clear? Good. Online student is asking, sir, there are no amendments. Hold on. We're coming here. We're coming. We'll go there. Don't worry. Next. Specified mutual fund means a mutual fund where not more than 35% of total proceeds are invested in equity shares of domestic company. However, the percentage of equity shareholding in respect of specified mutual fund shall be computed with respect to annual average of the daily closing figures. We'll take daily closing figures on every day, and then we'll take annual average. And that should not be more than 35% in equity shares. Then we'll call it as specified mutual fund. That's it. Next amendment, guys. Amendment in section 54 and 54F. What is section 54? 54 is applicable to individual and HUF. What is sold is a long-term residential house property. Investment is made in another residential house property. Time limit for purchase within 1 year before transfer, within 2 years after transfer. Construction within 3 years after transfer, you have to complete. Same timelines, same things are there in 54F. But in 54F, what is special point? Asset transferred is any long-term capital asset other than residential house property. And investment is made in residential house property. And 54F has got one more special point which says that the assessee, that is an individual or HUF, should not own more than one residential house. They should not own more than one residential house on the date of transfer. That is a very, very important condition. But one special amendment which has come, very, very important point is that if the new property acquired is more than 10 crores, then only 10 crores shall be considered. What does that mean? Example. So let's say, for example, Shiva, Teja, an individual. I sold a residential house property and I got a capital gain of 12 crores. How much I got capital gain? 12 crore. Entire 12 crores I have used for buying another residential house property. Normally, what will happen? I will take the entire 12 crores as exemption under 54. But now the problem is they made amendment telling that you can't take more than 10 crores as the value of property. Even though property value is more than 12 crores, actually you purchase property for how much value? 12 crore. But we will not consider 12 crore, we will consider only 10 crores. Then automatically exemption will become 10 crores. So whole idea is that for high income people who are getting huge capital gains, government doesn't want to give much of exemption. That's the reason why they brought this interesting amendment. Make sense, guys? Brilliant. Next. Rate of TCS in case of collection by authorized dealer. An interesting amendment with respect to TCS, tax collected at source. In fact, in RTP, the revision test paper of May 2024, RTP of May 2024, already we have recorded and posted on our Indigo and YouTube channel. It is also there. RTP is there in the YouTube channel. In RTP, there's an interesting question on this amendments. Let me tell you, on the amendments, there are some interesting questions in RTP. Very important. Already I have discussed that. A separate video is already recorded and posted on YouTube channel. You can watch out. Next. Where the amount is remitted for purchase of overseas tour program package. The rate of TCS earlier was 5% actually, but with effect from 1st October 2023. The answer is it is 5% till 7 lakh and thereafter 20%. So in case of overseas tour program package, in case of what? Overseas tour program package, up to 7 lakh rupees, it is 5%, and beyond 7 lakh rupees, it is 20%. That's the rate of TCS. Next point. Where the amount is remitted for a purpose other than overseas tour program package, and the amount or aggregate of amounts being remitted is less than 7 lakh rupees. If it is less than 7 lakh, then the rate of TCS is nil, my dear friends. No need of TCS. Next. Where the amount is remitted for a purpose other than overseas tour program package, but the amount remitted is in excess of 7 lakh rupees. Earlier it used to be 5%, but it has been now changed to 20% with effect from 1st October 2023. So you have to note that in case of overseas tour program package, what is the answer? Up to 7 lakh, 5%, beyond 7 lakh, 20%. Other than overseas tour program package, up to 7 lakh, it is 0. After 7 lakh, it is 20%. Next. Amount is remitted for the purpose of education or medical treatment and it is less than 7 lakh in a financial year. Then the answer is nil, my dear friends. Next point, same story. Education and medical treatment and amount is in excess of 7 lakh rupees. Then the answer is 5% of the amount or aggregate of amount in excess of 7 lakh. So in case of education or medical treatment, it is 5% in excess of 7 lakh. And the last but not the least, where the amount being remitted out is a loan obtained from financial institution as defined in section 80. Something like we have taken an education loan. What loan? Educational loan. And that amount we are sending outside India to the foreign university for the purpose of pursuing any education. But this is not own money. This is not own funds. This is not own funds. These funds, what we have transferred outside, is out of the loan what we have taken from financial institution. Next. And the amount is in excess of 7 lakh. Then the answer is, my dear friends, 0.5%. It's not 5%. It is 0.5% because it is out of the loan what he has taken. 0.5% of the amount or aggregate of amount in excess of 7 lakh rupees. Some special point, please see that. No TCS shall be applicable on expenditure through international credit card while being overseas. You are in foreign and there you are swiping international credit card. Then TCS is not applicable. 7 lakh threshold limit, very, very important concept. 7 lakh threshold limit is combined and it is not separate for liberalized remittance scheme like education, medical, etc. However, threshold limit for liberalized remittance scheme and overseas tour package, those two are separate. But for education and medical, there is no separate limit as such. This point is covered in RTP also, sir. Question is there in RTP. Please go through that. Next. Though the rate of TCS in this section changes from 1st of September, my dear friends, limit of 7 lakhs is what, my dear friends? Combined for a whole year and not for 6 months. Not for 6 months. Limit of 7 lakh is not per authorized dealer. As of now, there is no RBI system from where earlier remittance through other authorized dealer can be known. And hence, remitter has to give, person who is remitting, I have to give an undertaking every time about past remittance. So, for example, if I am remitting one time through one bank, second time through another bank, I should tell the new bank about what remittance I already made earlier through some other bank so that authorized dealer can calculate TCS. And for any false undertaking, appropriate action will be taken. And the last point, my dear friends, only travel ticket or only hotel accommodation is not a tour package. When I say package, there should be at least 2 elements. Package should include at least combo of 2 expense. If it is only travel ticket or if it's only accommodation, then it is not a package. Only international travel ticket or only hotel accommodation is not tour package. Package should include at least combo of 2 expenses. Next point, amendment in section 192A, that is withdrawal from provident fund. We know that in case of RPF, if the service rendered is more than 5 years, whatever we withdraw is not taxable, it is exempt. But if service is less than 5 years, whatever we withdraw is taxable and the PF authority will do TDS. And if there is no PAN, then TDS will be done at the rate of 20%. This is also an interesting amendment. Next point, my dear friends. TDS rate in case of section 194N. 194N is in case of withdrawal of cash from bank. In case of cash withdrawal, TDS provisions are given by section 194N, which specifies like this. Come on, see that. Where the account holder is a person other than cooperative society and the recipient is a non-filer of income tax return. Non-filer of what, sir? Income tax return. Cash payment exceeding 20 lakh but not exceeding 1 crore, then it is 2%. With exceeding 1 crore, it is 5%. And if it is not covered by case 1, that means he is a regular filer of income tax return and the cash payment is exceeding 1 crore, then it is 2% TDS. If he has not filed return, my dear friends, then more than 20 lakh does not exceed 1 crore, 2%, more than 1 crore, 5%. But for cooperative society, that means the person who has withdrawn is a person who is withdrawing money is a cooperative society, where the recipient account holder is a cooperative society. Up to 20 lakh to 3 crore, 2%, exceeding 3 crores, 5%. And if it's a regular filer of return, directly cash payment exceeding 3 crore, it is 2%. That's the story of amendment in TDS in case of section 194N, that is TDS on cash withdrawals. Good, excellent. Chalo, let me talk about one more very, very, very interesting amendment. Amendment in RFA working, that is rent-free accommodation. Sir, I am not talking about HRA, I am talking about rent-free accommodation. Very important concept, which is the perquisite. You would have learned already that in case of rent-free accommodation, we will look at whether accommodation is owned or accommodation is hired. If accommodation is owned, we further look at population. And population will take as per 2001 census, which says that if population is more than 25 lakh, 15% of salary, more than 10 lakh, does not exceed 25 lakh, 10% of salary, does not exceed 10 lakhs, 7.5% of salary. This used to be the answer earlier, which you would have learned in the classroom. You would have learned the same thing from me also. But let me tell you, amendment has come and this amendment is covered by statutory updates. Please see what they told. Population as per 2011 census is considered. Population as per what? 2011 census is considered. And if accommodation is owned by the employer, then what is taxable is if population is more than 40 lakh, 10% of salary. First of all, you should take population as per 2011 census. Next line. If population is more than 40 lakhs, then it is 10% of salary. And if population is more than 15 lakhs, does not exceed 40 lakh, it is 7.5% of salary. Population more than 40 lakh, 10% of salary. Population more than 15 lakh, does not exceed 40 lakh, 7.5% of salary. And if population does not exceed 15 lakhs, it is 5% of salary. And what is salary? I'm sure you already know. Basic plus dearness allowance if the terms of employment so provide, plus bonus, plus any commission, plus all taxable allowances, not perquisite, all taxable allowances. See the line, come on. First of all, we should take population as per 2011 census. This is first amendment. It used to be 2001 earlier, but now they told 2011. Next, if accommodation is owned, now three category. Population more than 40 lakh, 10% of salary. Population more than 15 lakhs, does not exceed 40 lakh, 7% of salary. Population does not exceed 15 lakhs, 5% of salary. And if accommodation is hired, my dear friends, if accommodation is what? Hired, then the taxable rent-free accommodation is actual rent paid or 10% of salary, whichever is lower. And for accommodation in hotel, I hope you remember that actual rent paid or 24% of salary, whichever is lower. That is as it is. In that, there is no change. Next point. If the same employee, same accommodation is given in subsequent year, then the value of perquisite will be valuation as per above rule. Above rule means 10%, 7.5%, 5%. Or valuation of 23-24 into CI of year of calculation divided by CI of 23-24. Something like indexation, what we'll do. You would have heard this indexation concept in capital gain, no? Same thing they brought. Telling that same employee, same accommodation is given in next year. Then what you do? You find out valuation as per rule, whatever rule we discussed. Or last year valuation into index number of current year divided by index number of that year. You will get some number. So out of these two numbers, whichever is lower, that will become value of taxable perquisite. Very, very important amendment. And last point, balance part of the provision is as it is without any change. That is your 24% of salary in case of hotel. And if accommodation is given at more than one place, then in that case, you remember that up to a period of 90 days, we will tax only that accommodation, whichever value is higher. And after 90 days, both accommodation will become taxable. I hope you remember that. We discussed that during our lectures. The same thing is applicable even now. So for the balance part, there is no change at all. So with that, my dear friends, that salary part amendment is over. Next slide. Amendment in section 35D, amortization of preliminary expenses, 5% of cost of project, 5% of capital employed, whichever is lower. Remember that, no? In the option of company, they say, so obviously practically we'll take whichever is higher. They didn't use whichever is lower, they use the option of the company. And basically, what are preliminary expenses? Something like preparation of feasibility report, project report, conducting market survey, all these things. And CBDT has specified that assessee has to furnish a statement containing particulars of the expenditure 1 month prior to due date of furnishing of return of income. What's the due date of furnishing return of income? Generally for a company, 31st October. Within 1 month before means what? By 30th September, they have to furnish a statement to the income tax department about the details of expenditure what they incurred, which is preliminary expenses in connection with project report, feasibility report, market survey report, engineering services, all that we have to do. The student is asking, sir, do we get this class in app recorded class? Yes, we'll put in the app. We'll keep this in YouTube also. For your easy reference, we'll put on YouTube also. Don't worry. Next point. Amendment in relation to life insurance policy. First of all, my dear friends, we know that if policy is taken on or after 1/4/2012, policy is taken when? On or after 1/4/2012, maturity amount is exempt if the premium payable does not exceed, premium payable per annum does not exceed 10% of sum assured. But here, one very important amendment has come, telling that if any insurance policy is taken, if any what is taken? Insurance policy is taken on or after 1/4/2023. I repeat once again, if any insurance policy is taken on or after 1/4/2023, and if the premium payable per annum exceeds 5 lakh per annum. I repeat once again, if premium payable per annum, if what's a premium payable per annum exceeds 5 lakh per annum, then maturity amount is taxable. That means even though the premium does not exceed 10% of sum assured, but if it is more than 5 lakh, then maturity amount will become taxable. So for policies taken on or after 1/4/2023, in order for maturity amount to be exempt, we have to see two conditions. Number one, premium payable does not exceed 10% of sum assured. Number two, premium payable does not exceed 5 lakh per annum. Let us say premium payable is more than 5 lakh per annum to the extent of those policies where it is not more than 5 lakh per annum, that we can take exception. For example, let us say Shiva Teja has taken 3 policies. For each policy, I am paying 2 lakh, 2 lakh, 2 lakh. Total is 6 lakh. And all 3 are taken after 1/4/2023. So for all 3 together, I can't take exemption because total is going more than 5 lakh. But any 2 I can take, no? Because if I take 2, it is only 4 lakh. This one I'll pay tax. That is possible. See the line, come on. If the total premium of such policies exceeds 5 lakh per annum, but still those policies covered therein whose premium, whose what's a premium does not exceed 5 lakhs, those policy maturities will be exempt. Very important amendment. No doubt about it. There is one first question in RTP on this related concepts. Very important point. And see this point once first. Limit of 5 lakh is not applicable to term life insurance because, my dear friends, term life insurance money will come only on death, which is not taxable. Which is not taxable at all. Term policies means we pay premium. Money will definitely not come back unless a person dies. If a person dies, the money will come and it is exempt. And what is taxable is only the surplus. We don't tax full amount. Maturity minus premium paid. Maturity minus premium paid up to maturity, which is not claimed as deduction in any provision of income tax. Obviously, if you have taken deduction under income tax, let us say something like 80C, already enjoy benefit. Now, if you tell you don't not pay tax also, it will become double benefit then. That's why they told maturity amount what you got minus premium what you paid up to maturity, which is not claimed as deduction. Which is not claimed as deduction. That's an important point. Next. And the premium limit of 5 lakh rupees to be seen exclusive of GST. Exclusive of GST means excluding GST. Always see that 5 lakh rupees limit excluding GST, my dear friends. You should never see that 5 lakh limit including GST. You should always see that 5 lakh limit excluding GST. Because sometimes there is a possibility where including GST is more than 5 lakh, but excluding GST does not exceed 5 lakh. In that case, the maturity amount will be exempt, provided it's not more than 10% of sum assured. That is also important. So if policy is taken on or after 1/4/2023, we look at two conditions. Condition number 1, premium payable does not exceed 5 lakh per annum. And condition number 2, premium payable does not exceed 10% of sum assured. Two conditions we'll check. So that is the story of amendment in relation to life insurance policy. Very, very important discussion. Next point. TDS on online gaming. Section 194 BA. I hope you know that there is something called 115 BBJ, which says that in case of net winning of online games, it is taxable at the rate of 30%. And the person paying that money will also do TDS at the rate of 30%. And when will TDS be done? It will be done at the time of withdrawal or at the end of the year, whichever is earlier. Generally, they'll do at the end of the year. But if the amount is withdrawn before the end of year, at that time only TDS will be done. So TDS will be done during withdrawal or at the end of the year, whichever is earlier. Next, some CBDT guidelines, Central Board Direct Taxes Guideline. Net winning, if not more than 100 in a month. If it is, what's that? Not more than 100 in a month, then TDS is not applicable. However, if in any subsequent month, amount will exceed 100 in a month, then TDS will be deducted entirely from that subsequent withdrawal. I'll highlight that word. However, if in any subsequent month, amount is exceeding 100 in a month, then what is happening? TDS will be deducted entirely from subsequent withdrawal. The moment you cross 100, then TDS will be deducted entirely from subsequent withdrawal. And if winning is in kind, then before realizing benefit, they will ensure that payment of TDS is done. Then basically what will happen is they'll ask TDS amount from the winner and pay to the government. And how to calculate winning if it is in kind? If it is in kind, and if the winning is purchased by the payer, then we'll take purchase price exclusive of GST. And if it is manufactured goods, then the value will be price which is charged from the other customer, exclusive of GST. That's the story. I'm sure we are clear with this point, everybody. Please reply once. Good, fair enough. Next. Certain more persons required to obtain PAN, permanent account number, 10-digit alphanumeric code. Person who is intended to deposit cash in any account, could be a single account or it could be aggregate of all amounts. Any one account or aggregate of all accounts, greater than 50, greater or equal to 20 lakh rupees. He is intended to withdraw cash, greater or equal to 20 lakh rupees. And a person intends to open current account or cash credit account, something like an OD account, then he has to obtain PAN at least 7 days before the date on which he deposits over 20 lakh rupees. At least 7 days before the date on which he intends to withdraw over 20 lakh rupees. And current account, cash credit account, at least 7 days before opening such account, he must obtain PAN. Getting clarity, everybody? That's it. And that's the end of story for amendments in income tax, my dear friends. Lot of brilliant points. See, what happens is that I'm focusing so much on all these points because any small amendment can become a question in the examination, and that will add value for your marks. And because of this, even if you get 1 mark more also, we'll be more than happy because every mark will make a difference. And ultimately, it's not 1 mark, it is 6 months of our career, which is very precious and very important. Can we proceed, my dear friends? Please confirm. Thank you so very much. Thanks for your participation, guys. So that's the end of story for amendments in income tax, which is about part 3A. Now let me talk about 3B, amendments in GST, my dear friends. And GST you will not find so big points as such, but you'll find minute points. But that minute point can become an MCQ question. And any single MCQ also is very scoring for us. Because every mark is important, guys. We are writing a professional exam. In professional exam, every mark will make a huge difference in our ultimate score. Clear? Done. Let's see that. GST amendments. First point, entry number 6 has been amended. What is entry number 6 actually in Schedule 3? Actionable claims other than betting, gambling, lottery. This was the point earlier. But now that point has been amended, stating that actionable claims other than specified actionable claims. The reason being, now casinos, horse racing, online money gaming is also taxable. Nowadays, there is too much of importance for online money gaming. A lot of people got addicted to that games. Government thought it's a high opportunity for them to collect tax. Then they told that casino is taxable under GST. Horse racing is taxable under GST. Online money gaming is also taxable under GST. So see the line. Although actionable claims are goods, but supply of only specified actionable claims, GST will be levied. What is covered in specified actionable claim? Betting, gambling, lottery, casino, horse racing, and online money gaming. They are all now taxable. Next point. Clarification on taxability of supply of food and beverages in cinema hall. So in movie theaters, when we go, especially in multiplex screens, we are so used to buying some popcorn or Coke or some food while watching the picture. Correct? Now, whatever food they are being supplied in the cinema theaters, it's as good as a restaurant service. It is as good as a restaurant service. But if the food and beverages at cinema hall are supplied independently, they are taxable at restaurant service. But in a special case, I will tell. If the sale of cinema ticket and supply of food are clubbed and satisfying the test of composite supply, then we will apply the rate of principal supply. But when do you call it composite supply? Only when they are naturally bundled. If it is composite supply, we will tax at the rate of principal supply. And composite supply language will come only when two or more taxable supplies are naturally bundled, and one of which is principal supply. Next point. Clarification on taxability of shares held by a company, shares held in a subsidiary company by holding company. The activity of holding of shares of subsidiary company by the holding company per se cannot be treated as supply of service by holding to subsidiary and cannot be taxed. So just because there is a holding company which is holding shares of subsidiary company, just by purchase of share, will you say that there is some transaction and it is a supply? Answer is no. But if holding company provides some activity of supply of goods or supply of service to subsidiary company, that will become taxable. Because holding company and subsidiary company are regarded as related person. Even if there is no consideration, still we will tax them. But just the activity of holding shares, is per se not taxable. Per se not taxable. That is an important point. Next line. Charge of GST. Amendment in RCM related services. Now all supplies supplied by Ministry of Railways, which is nothing but Indian Railways, shall be liable for a forward charge mechanism. RCM will not come into picture. Forward charge mechanism only will apply. Next. Taxability of services supplied by director of a company in personal capacity. such as renting of the property to company or body corporate. So the point is that we know that when a service is given by director to a body corporate, it is covered under RCM. But services by director to body corporate is covered under RCM when director is providing service to the company only in his official capacity. But if any service is given in personal or private capacity, then it is not taxable under RCM. This is more of a clarificatory in nature. Only those supplies supplied by director in the capacity of director, shall be taxable under reverse charge mechanism. And other supplies supplied in private or personal capacity are not taxable under reverse charge mechanism. Got my point, everybody? Good. Notified category of services supplied through e-commerce operator, amended. So we know something called section 9(5), which says that in case of certain notified services supplied through e-commerce operator, who is liable to pay GST is e-commerce operator. Correct, no friends? Example, transportation of passengers by way of radio taxi, motor cab, maxi cab, motorcycle, omnibus. Second, services of hotel accommodation, except when person supplying service is liable to be registered, housekeeping services, and one latest point, restaurant services. But one amendment has been brought in this context, where they have specified that, in general, service by way of transportation of passenger through eco, in such case, who is liable to pay GST is e-commerce operator. But the amendment what they brought is that, in case of passenger transportation services by omnibus, what is that word? Omnibus, bus. Eco is liable to pay GST only when the person supplying services through Eco is liable to pay GST only when the person supplying services through Eco is a company. Getting my point, everybody? So speak out, my dear friends. So generally, what is the point, my dear friends? I repeat once again, please carefully listen. What is the concept normally? Normally, the concept is that in case of passenger transportation service through e-commerce operator, my dear friends, who is liable to pay GST is e-commerce operator. E-commerce operator. But what is the amendment they have done now? In case of transportation of passenger service by omnibus, my dear friends, in case of passenger transportation service by what? Omnibus. Omnibus. Who is liable to pay GST is that e-commerce operator is liable to pay GST. See, the whole point is that, okay, let me put it this way. Service by way of transportation of passenger by omnibus, except where the person supplying such service through eco is a company. That is what is the point. So in simple terms, what is the point? In case of passenger transportation service by omnibus is provided by the company through eco, then who is liable to pay GST is company itself. If it is other than company, who is liable to pay GST is e-commerce operator. E-commerce operator. Getting my point? So if the person supplying, I repeat once again, if the person supplying omnibus service, you can see that line. Person supplying omnibus service. Come on, guys, what is the line? If the person supplying omnibus service is a company. If a person supplying omnibus service is a company, who is liable to pay GST is company. If not, who is liable to pay GST is e-commerce operator. You can see this line. Tax on services by way of transportation of passenger by way of omnibus provided by a company through e-commerce operator is not payable by e-commerce operator. It will be payable by company itself. It is payable by whom, sir? Company itself. That is the point what you have to note. So eco is liable to pay GST only when person supplying service through eco is other than company. I'm sure you got the point here. Important amendment, my dear friends. Got the point, no? Friends, I've clearly shown you that point. I've shown you from statutory update itself, I've shown you that point. If you want, I can just show that once again also. tax on services by way of transportation of passenger by way of omnibus provided by a company through ECO is not payable by ECO. It will be payable by company itself. That is the amendment. You got the point, everybody? That's it. Next point, my dear friends. Section 10.2. What is section 10.2? 10 is what? Composition scheme. So generally, earlier the point was a person supplying goods through e-commerce operator. A person supplying what? Goods through e-commerce operator was not allowed to opt for a composition scheme. But let me tell you, this point has been amended now. A person supplying goods through e-commerce operator is eligible for opting composition scheme, but provided he is doing only intrastate supply. And special procedure notified for e-commerce operator with respect to composition supplier supplying goods through them. ECO shall not allow any intrastate supply. That is important. ECO shall collect TCS and pay to the government. Furnish details of such supplies of goods in GSTR 8, which ECO will file. Clear, friends? Chalo. Amendments in exemption. Entry number 3B, one new amendment added in exemption. Services provided to governmental authority by way of water supply, public health, sanitation conservancy, solid waste management, and slum improvement and upgradation. Got the line, everybody? Service provided to governmental authority by way of what? Water supply, public health, sanitation conservancy, solid waste management, and slum improvement and upgradation. Next line. Service by government along with Department of Post, Ministry of Railways has also been covered. Everywhere, wherever there is Department of Post, they also added the word Ministry of Railways, nothing but Indian Railways. Satellite launch services. Satellite launch service provided by any person shall be exempt. Earlier exemption was only to Antrix Corporation, but now it is exemption is given to everybody. Just to give you more knowledge, I'll show you something interesting. See that, no? See how they brought amendment. You will be surprised to see. See here, satellite launch service supplied by Indian Space Research Organization, Antrix Corporation. They have deleted these words. Then what will happen now? Satellite launch service given by anybody is exempt. That's the point. Makes sense, all of us? Come on, my dear friends, please reply. Yes, are we fully clear? I'm waiting for a reply. If you participate and reply, I'll be more than happy if by your participation, my dear friends, because your participation gives more energy to us for us to explain the things more in a more wonderful fashion. Because ultimately these points are very important, because high probability that question will trigger in the examination from these particular parameters. Because amendments are always very, very important. Because any small question, any MCQ can come from amendments. Getting clarity, everybody? Can I proceed? Thank you. Next point. Time of supply. In case of specified actionable claims, what are the specified actionable claims, my dear friends? Betting, gambling, lottery, casino, correct offense, horse racing, online money gaming. Tax shall be paid at the time of receipt of payment. Tax shall be paid at the time of receipt of payment for such supplies by suppliers. That is on advances also. Generally, in case of goods, on advances, there is no liability to pay GST. But in this case, there is liability to pay GST in case of specified actionable claims. Next point. Amendments in place of supply. New clause inserted for sale made over the counter in one state and transported to another state by buyer. For example, my dear friends, let us say one person, Mr. A of Maharashtra, he went into Tamil Nadu. In Tamil Nadu, he purchased some goods and then he is only transporting to Maharashtra. Then what will happen? If the address of the unregistered person is recorded in the invoice, then the place of supply is location as per address. or else place of supply is location of supplier. The recipient, that is unregistered person, address is recorded, place of supply is location as per address. And if it is not recorded, place of supply is location of supplier. And simply mentioning the state of unregistered person instead of complete address will be sufficient. Need not mention full address. Just if the state is mentioned, that itself also is sufficient. Next line. Clarification on place of supply in case of supply of service in respect of advertising sector. Supply of space for hoarding given by vendor to advertisement company is grant of rights to use immovable property. Hence, section 12(3) will apply and place of supply will be determined as per immovable property. And place of supply is the place where property is located or intended to be located. Place of supply in case of supply of space on hoarding, it's given by vendor to advertisement company. Next. If the vendor is responsible for display of advertisement, not just a space, then is providing advertisement service to advertisement company, then place of supply will be determined as per section 12(2), which is nothing but general rule. Important points. Next, block credit. An interesting point in block credit, section 17(5), where they have specified that ITC shall be blocked on goods or services or both received by taxable person which are used or intended to be used for activities relating to CSR, that is corporate social responsibility, section 135 of Companies Act. If any goods or services are procured and they are used, then in that case, on that goods or services, whatever GST is paid, we cannot take it as input tax credit. Moving ahead, amendments in registration topic, very important. Some good amendments have come. Compulsory registration for persons supplying online money gaming from a place outside India to a person in India. Because a lot of online games today, what we see, are more operated by persons sitting outside India. Next. Person supplying goods through e-commerce operator is exempted from mandatory registration. That means earlier what they told is that if a person is supplying service through e-commerce operator, he need not take registration unless threshold limit is crossed. Same formula, same concept, they applied even to goods also. So if a person is supplying goods through e-commerce operator, he need not take registration unless he crosses threshold limit. But he cannot do interstate supplies. If he's doing interstate, then gone. He definitely have to take registration. And he should not do more than one state. Correct, no friends? And he should be having PAN. And before making supply through ECO, declare PAN, address and the state. And validating the PAN, one enrollment number is granted. And he should not supply through ECO before enrollment is granted. That's also an interesting line. And also, ECO also, that is e-commerce operator also, should follow some procedure. ECO shall allow supply only if the enrollment number is allotted to them. And they should not allow interstate supply. They shall not collect tax at source. And ECO shall furnish details of supply of goods by the said person in GSTR 8, which is filed by e-commerce operator. This is one interesting amendment which has come, my dear friends. High probability question can come in examination. Application for registration substituted. Rule 8(1) has been amended to exclude a person supplying online money gaming from place outside India to person in India from declaring their PAN and state for applying registration. So a person is supplying online money gaming activity from outside India. How can he give PAN? It's not mandatory that he will have PAN. And he's not taking any specific state-wide registration. Instead, simplified registration scheme earlier prescribed for persons applying order service, online information, database access and retrieval services. Same thing has been made to persons applying online money gaming services. Next. Verification of application and approval. Amended to omit the words in the presence of the said person. Whenever officer is coming for physical verification, it's not mandatory that the applicant should be physically present. Requirement of presence of the applicant for physical verification has been done away with. That means there is no requirement that physically the person must be present in case of physical verification of premises. Next point, very, 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 very important. Sir, when we are applying for registration, we have to submit something called bank account details. When we go to the bank is telling, give your GST number. So practically that's a big problem. So that's where they brought one interesting concept in the law, telling that you can apply for GST registration even without your bank account details. But subsequently, you have to update your bank account details. Now, what they have specified is that you have to furnish your bank account details within 30 days from the date of grant of registration. 30 days. How many days? 30 days from the date of grant of registration or before furnishing GSTR 1, whichever is earlier. Within 30 days from the date of grant of registration or before furnishing GSTR 1 or using IFF, invoice furnishing facility in case of QRMP. So within 30 days from the date of grant of registration or before filing GSTR 1, whichever is earlier, you have to update your bank account details on the GST portal. Practically, we update by submitting a cancelled check online. Next, physical verification of business premises. If physical verification, generally physical verification is done if other authentication is not done, or other authentication is done, but officer is of the opinion that physical verification is to be done. Physical verification after grant of registration. In that case, verification report to be uploaded within 15 days, 15 working days post verification. And if physical verification is to be done before grant of registration, then it must be uploaded at least 5 working days prior to completion of 30 days. Because whenever physical verification is ordered, officer will take 30 days time to grant registration. So at least 5 working days prior to completion of 30 days, they must upload a physical verification report. Nowadays, in some special states like Maharashtra, Tamil Nadu, even now in Telangana also, in so many states, the officers are conducting physical verification only. And only then they are giving registration. Because a lot of fake registrations that have come out, because of which GST department has started taking this initiative mandatorily for almost every person. Next point. Suspension of registration. Provisions introduced for a system-based suspension of registration in case of failure to furnish details of bank account within stipulated time and automatic revocation on furnishing the said detail. I told you that within 30 days or before furnishing GSTR 1, whichever is earlier, you have to update bank account details. And if you don't update, what will happen is they'll suspend the registration. And once you update, they'll revoke the suspension. They'll suspend and they'll revoke the suspension. Both they'll do. Next point. Revocation of cancellation of registration. Generally, once revocation is done, you have to apply for revocation within 30 days. Generally, once cancellation is done, you can apply for revocation within 30 days. But this 30 days is now increased to 90 days. You can apply for revocation within 90 days from the date of service of order of cancellation. And if there is sufficient cause and for reasons recorded in writing, it can be extended by commissioner or any officer authorized in this behalf not below the rank of additional or joint commissioner for a further period not exceeding 180 days. This is one very, very interesting amendment related to section 30, revocation of cancellation. Next point. E-invoicing. So from 1st August 2023, my dear friends, e-invoicing is applicable to any registered person whose aggregate turnover in any financial year starting from 17-18 exceeds 5 crores. Last attempt, this was 10 crore. But now onwards, the answer is 5 crores. E-invoicing is applicable for every taxpayer having aggregate turnover exceeding 5 crores in any financial year starting from 17-18. Next point. Applicability of invoicing to government department. Sir, logic is simple, sir. If Shiva Teja is supplying some goods or supplying some service to a government department and my turnover, aggregate turnover is exceeding 5 crore, just because I'm submitting to government doesn't mean that I will not issue invoice. Still have to issue invoice. Registered persons whose turnover exceeds 5 crore, that is aggregate turnover, and issuing invoices to government department, establishment, agencies, local authority or PSU are required to issue e-invoice. Even though supply is made to government, still have to issue e-invoice, my dear friend. No excuse. Next point, amendments in payment of tax. Sir, if IGST credit has been wrongly availed, sir, generally interest will come when credit is wrongly availed and utilized. If you just avail, but you don't utilize, then there's no interest concept at all. Correct, no friends? But here what has happened is IGST credit is wrongly availed and subsequently it is reversed. There will not be any interest liability during the time period starting from such availment up to reversal. If the balance of ITC in credit ledger under the head CGST, SGST, CGST, SGST, IGST taken together never fallen below the amount of such wrongly availed ITC. We are taking IGST, CGST, SGST together because for payment of IGST, we can use IGST. For payment of IGST, we can use CGST also. For payment of IGST, we can use SGST also. So whenever we have taken IGST credit, subsequently we reversed it. Interest will come only when the credit is utilized. Now, when do you say the credit is utilized? The total of IGST, CGST, and SGST all put together. IGST, CGST, SGST put together has fallen below the limit of credit which is wrongly availed. Then only interest will come into picture. Very important points. This objective of this point is because you can use IGST, CGST, SGST, all three credits for payment of IGST. That's why. But credit of compensation cess shall not be taken into account. Logic is simple because you cess use compensation cess for anything. You can use compensation cess only for payment of compensation cess. GST compensation cess we are talking about. That's the story of amendment in payment of tax. Now, TDS and TCS, my dear friends, the details of TCS furnished by e-commerce operator in GSTR 8 will be made available only to registered supplier. Obviously, because supply by unregistered person will not attract TCS. Clear, friends? Next point. Some more special point. Additional cases prescribed wherein registered person is debarred from furnishing statement of outward supply. That means he cannot file GSTR 1. So logic is simple. So let us say I am in the month of January. Previous month, December, there is a difference between GSTR 1 and 3B. GSTR 1 and 3B. Clear, friends? Or ITC which is there in 2B and what I claim, there is a difference. What happens is automatically notice will come online telling that you have claimed more than the ITC which is there in 2B. Please pay that extra amount or please tell the reason for that difference. If we don't respond or if we don't pay, then we cannot file GSTR 1 from next month. See, government is interlinking. If you don't reply, I will not allow you to file GSTR 1. Registered person is served intimation under Rule 88G. Unless he has either paid the amount equal to excess ITC what he has claimed or has furnished a reply explaining the reason. We are not asking you to always pay. Either you pay or you explain the reasons why you took extra. Or registered person has not furnished the details in bank account. If you have not furnished details of the bank account, we will not allow you to file GSTR 1. And moreover, we'll suspend your registration after the time is over. And once you update, we'll revoke that suspension. No problem. Manner of dealing with the difference in ITC available in auto-generated statement, which is nothing but GSTR 2B. If the ITC availed in 3B exceeds the ITC which is there in 2B by such amount and percentage as recommended by the council, then the person shall be intimated of the difference in part A of the form GST DRC 01C. Practically, I've seen this a lot. I've seen practically. Registered person shall either pay the excess ITC along with interest and furnish the details thereof in part B, or furnish reply. Either you pay or you furnish reply incorporating reasons why excess ITC that has still remained to be paid in part B of DRC 1C within 7 days. And if any amount remains to be paid within a period of 7 days and no explanation or reason is furnished by the registered person in default, or where the explanation furnished is not found to be acceptable, some reply is giving which is not acceptable at all, then the said amount shall be liable to be demanded. Then what will they do is they'll go for recovery proceedings. Officer will start recovery proceedings. That's it. That's the story of amendments in GST, my dear friends. amendments in GST, that is 3B, and we have also discussed amendments in income tax, that is 3A. The whole idea of this particular lecture or this particular session is to get a complete clarity of thought on all the amendments which are relevant for May 2024 examination, so that we are fully clear with that and we are ready to tackle the examination of May 2024. I'm pretty confident and sure that we guys have got some good knowledge and we could recall all the provisions and also understand exactly where is the amendment in which particular topic we need to focus upon the amendment. Clear, my dear friends? And that's it from my side, from Indigo Learn, with respect to amendments for May 2024 examination with respect to CA inter taxation of income tax and GST. If you have got any doubts, you can feel free to comment in the chat box. We'll be more than happy to reply subsequently also. And anyways, we have got forums. You can feel free to post on forums. And as already shared, my dear friends, our TPs are already recorded and they are put in Indigo Learn YouTube channel. You can just watch out for sure. Very important, my dear friends. You'll get some command on the subject. Clear? That's it from our side, my dear friends. And I wish you all the very best. Wish you all success. Stay tuned to Indigo Learn channel for more such updates and for more such interesting points about taxation. Thank you so much. Take care. Shiva Teja signing off. Wish you all success, my dear friends. Take care. Bye-bye.